Good afternoon, good morning, and in some cases even good night. Welcome to the last session of this year's GTR Asia conference. My name is Johan Egnell. I am the head of Asia for Mitigram. I am based in Singapore. We are here today to discuss the future of trade finance in relation to digitization, and more specifically, what should or shouldn't be done to further increase speed of digitization. Earlier this week, there was a panel on the topic, is the trade digitization landscape finally maturing? Almost indicating that we've reached a point that, yes, we have reached a plateau of success. But in this panel, we will take an opposite view and we will make the assumption that we have not come far enough. So we will discuss what more can be done. And to my help, I have a great panel. I have Verachin, Trade Finance Head for Vale. She's based in Malaysia. I have Enno-Burghard Weitzel. He is the Senior Vice President of Business Development and Digitization of Surecomp. I have Srinath Keshavan. He works for TradeAssets. TradeAssets is a marketplace on the secondary market where banks, insurers, and ECAs transact bank risk. I have June Kim representing the view of banks. He is the Global Head of Trade Product and Portfolio Management for a Bank of New York Mellon. He deserves a special mention. He's based in New York, and I believe it's 3 a.m. Well done. Thank you for coming, June. We have Sin Yong. He is the voice of the regulatory bodies in the world today in this panel. He's the Director for Trade for IMDA, the Infocomm Media Development Authority in Singapore. There is a Q&A part to this. I think all of you listening to this and viewing this, you are allowed to answer questions. We will try to bring them up and include them in this session. But we will start off with questions to our panelists. I consider them all to be experts in their field, so please take your time and listen to them, and hopefully we all learn something. I will start with perhaps the most important actor of all, the corporate. Vera, starting with you. You have come in Vale, you've come a long way in terms of digitization. You've part in many different initiatives. You're being quite active. You're actively pursuing digitization. For you as an organization, we're hoping that you will inspire someone else now. What have been the benefits of being this active and taking this active role?
Thanks for the introduction, Johan. I'm quite flattered for your introduction. I believe that all the panelists here plays a very important role in the ecosystem, and we need to actually collaborate with each other on that. Well, now back to your question. Vale is undergoing a period of transformation with digitization, and we identify digitalization as one of the key drivers for our company. And it's a journey. That's why we undertake to enhance our process and productivity to improve our proposition to be a more reliable mining company. We have made strides in digitalization journey, but it's still a lot of value to unleash from it, basically. We believe that this needs to happen in an ecosystem that is viable and sustainable, so the transformation we are working on can be seen in our process, in our infrastructure and mindsets. What is also important to emphasize is the intent of our digitalization process. We put client centricity at the heart of our approach. Instead of introducing digital solution as innovation taught out in silos, we promote our digital offering as a means to mitigate some of the common issues that our clients are facing by enhancing efficiency and improving the value proposition of transacting with us, which brings more transparency, faster turnaround, security, and real-time visibility of data. Digital transactions such as blockchain that we successfully introduced last year with our partners are proven to be less carbon intensive as they do not require paper and logistics arrangements. And this helps to decarbonize our trade finance process and contribute towards Vale's overall goal to become a net zero emission company by 2050. So in a nutshell, the benefits are better transparency, visibility, security, faster turnaround documents, fast access of data, and is more carbon efficient.
Thank you, Vera. I like how you tie together digitalization with actual client value, sort of tying it into the business. Enno, you work for an established fintech, but you have a long history of working in financial institutions as well. There's been a lot of talk about digitalization for the last 5 years. Every session has multiple conferences, but we haven't come very far. Is there, in your view, something that's off? Do we approach all of this from the wrong angle?
Yeah, thanks, Johan, for that question. I think that's to the point. Digitization or digitalization, which there's a difference, but say take both as just one journey, as Vera put it. It's not a target on its own, right? We don't do it for the sake of digitization. There always must be a clear, say, higher value. And I like Vera's view also, because that higher purpose can only be the customer focus. Now, for IT vendors like us, the customer focus is serving the corporates and serving the banks with providing better IT solution. And then put yourself in the shoes of the bank or the corporate itself. It is, again, serving their customers. So we have to be customer focused. And once I talked to a CEO of an IT company, because I wanted to learn from him who had run that company for the last 20 years, I wanted to learn about how he approached the technical evolution, what he thinks about APIs, what he thinks about blockchain. And it was an IT company CEO, and he told me he doesn't care about technology. I was a bit set back. And then he told me, listen, I always take the view of the customer value. And actually, that's the right question to ask. You know? Now, my point too, if I try to summarize what Vera was saying, corporates want to do more business. That's number one, right? Eventually, they want to outcompete their competitors, because even though we don't like competition, we acknowledge there is competition. Eventually, they want to reduce cost or risk or resource consumption. And eventually, they want to do good, say, for the society. And Vera just provided examples for every single of these items. Faster turnaround of documents, being net zero by a certain date, enabling a better, easier doing business for their customers to do business with, say, a customer. And from that perspective, the vast majority of, say, the digitization initiatives are falling short. Because even though, say, a blockchain solution might reduce the carbon footprint comparing paper to the carbon consumption of the blockchain solution, well, it doesn't provide the network effect yet that, say, traditional solutions like Swift do provide. So we need hybrid solutions to overcome that chicken and egg problem. And from that customer point of view, just having a superior solution that only in theory is superior if everyone participates is just not enough from the perspective of the vast majority of the customers. Looking at the allocation of the transactions, like I don't think we disagree saying that 99%, and then we can argue about how many 9 after the comma, is done over Swift. Now, 2021 and 2022, I don't think will make a big difference. So from that perspective, yes, we are falling short. My network didn't like me saying we reached the tipping point, that eventually we're underestimating, or say we're overestimating the impact that digitization may have in the first, say, half of the journey. But I do believe we're underestimating the impact it will have on the second half of the journey. And maybe I stop here to let my internet connection recover and hand over to you back, Johan.
Thank you, Enno. And I think you have a very valid point. I was following a thread on social media recently where there were people arguing that most corporates, they don't care about digitization of trade documents. They just want to ship their goods. So maybe that's not where we should start, but let's save that for later. Moving on to New York. June, are you awake? Banks.
Yeah, hi, Johan.
That's great.
Good afternoon.
Banks are truly necessary to trade finance. Fintechs, we can try everything we want, but banks are at the heart of it. You have the network, you have the balance sheet. Do you think that change, digitalization, must come from banks? Or is there a case to be made that banks are stuck in old ways of thinking, that they need to partner up, or they need to wait for third parties to do it? What's your view on this?
Yes, I think it's an interesting question. I think the way I would sort of summarize is the first few years of where the emergence of the fintech, I think there was a little bit of a concern from the banking perspective as to what the role that the fintech was going to play. But over the last couple of years, I think it has come imperative, it become a fact that I think banks realize that the collaborative effort with the fintech becomes essential, part of how we want to digitize and transform this. So what's so-called the traditional paper manual intensive business. So I think what the to I think his point at the beginning, the corporates, and I think Johan, you mentioned, corporates are looking for solutions as to how they can do more trade settlements. Ultimately at the end of the day, their objective is to do more business, and I think the banks are trying to provide a right level of solution so that we can build a scalability to do more efficient amount of businesses. Minimizing the fraud and have a control and monitoring in place to do the business so that everybody feels this is a sound business. So in order to do that, I think really the fintech and the technology component comes in. This is where we're trying to embed some of the blockchain digital distribution technology that Vera is referring to. So having that real visibility and the transparency about the transaction. And then on the digital front, I think one thing I would say is you can do two things. One is, can we digitize everything overnight? The answer is no. It requires a lot of regulatory framework, changes in the rule book, so it will take some time. So that's a journey we should take right away. So I think as a result of the pandemic, I think all banks in the industry have recognized that we need to move this a little faster. At the same time, digitization, you can do other things. So what banks are looking for, including us, is to what are some of the ways that we can improve our process internally, the operational efficiency, digitizing of the papers once the request for certain transactions are received, how we automate that for a compliance check filter, going into the credit limits, understanding that so if you can eliminate certain aspects of the operational efficiencies in the back end, you essentially creating a digital framework on your back office. So I think there are twofold to the digital journey. And I think to your original question, on the effort that's needed for us to do that, I think the fintech and technology companies become critical component of who we need to work with from the banking perspective.
Thanks, June. It's I think all of us are always anxious to see what banks are doing and what path they're taking. So the next couple of years, I'm sure you're discussing a lot within the bank as well, where to put your effort. Sin Yong, moving back to Singapore, you have been instrumental, you personally even, in driving standards for digitization through trade trust. So well done, congratulations. Now there's some issues arising from this, that we see different standards competing almost. Is this an issue? Is this something we need to be afraid of? Is this another digital island, or is this something that it's needed to spur adoption? What's your view?
Actually, my view is quite simple, because from the various past standardization experience or projects that I'm personally involved in, the issues of multiple standards will always be there. Why I say that? This is because technology is always evolving. There will always be new standards that are being developed, while other existing standards are progressively being implemented and enhanced. In addition to the many old standards out there, they are already being deployed due to legacy implementation. As such, our approach is to look at how this standard can be made to coexist without the need to decide on one over the other. Actually, if you take a step back and look at trade digitalization in totality. This topic is actually not new. The industry has been working to overcoming the many challenges for decades. And we really think about it. The main reason why paper is needed in cross-border trade is because it typically involves many parties exchanging lots of information via their own respective silo systems that are not interoperable. So at the end of the day, the paper becomes the only common denominator to carry information and data. And not only that, different organizations have different level of digital capabilities and have different priorities in building or upgrading their respective IT systems. So with individual organizations working in silos, the result is the lack of coordination or interoperability between organization systems. Plus, it is costly for them to integrate many of these silos at scale. As such, we believe that a better way for thousands of digital silos globally to interoperate is needed. And this is the new way, and this new way to interoperate such so many digital silos at scale need to be fast, cheap, and easy to implement. And that is actually the thinking behind Trade Trust.
Thanks, Sin Yong. I believe I agree with you that there will be competing systems. What's good about that is that the technology is moving forward with APIs as well, that interoperability will become easier and easier going forward as well. So
actually, Enno make a very good point that resonate with me. 2 points to be exact. Number one, network effect. Number two, it's not about the technology. Because when government invests in our taxpayers' money to build infrastructure, such as creating a framework that allow every party in the world to use, then businesses can focus their limited resource on generating values or business value for their customers.
Yeah, sorry, maybe just jumping on that point. Obviously, I couldn't agree more. And just one example that resonates with me when we were all still using the VHS video cassette, yeah, and then there came that DVD, and all of a sudden, the industry decided that something needed to come after the DVD, and there was the decision of whether it's Blu-ray or whether it's DVD plus.
Yes.
Yeah? And the minute Walt Disney decided for Blu-ray, DVD plus was dead. There was no regulatory effort necessary to kill DVD plus. The market actually decided. And in that way, I would say, let all these digital initiatives compete. The market will at a certain point decide which one will go. And it will add a new standard to the existing one. And over time, eventually the old existing one will just evaporate because no one's using it anymore. Yeah. So I think that is a very likely path that our digitization journey will take.
You see, the pattern always look like this. Any new standard that come out will purport to say, oh, this is the greatest standard of all. And this is the only standard you need to use. But how true is it? Nobody knows. The market will tell.
Thank you. I like that. It's both a dark and a bright vision of the future. Moving forward, Srinath, this is close to my heart as well, because we do the same on the primary market where we connect corporates and banks. But trade finance has historically been very much based on relationships, personal connections, meaning there's a lot going on WhatsApp and phone call. You operate in the secondary market, which is very relationship driven. And you're looking to build a marketplace. How is this going? Why does the world deserve a marketplace on the secondary?
Thank you for that question, Johan. And I thank GTR for inviting me for this discussion. It's great to see all of you and meet with you. Johan, you've provided me with an ideal opportunity to make a short plug on TradeAssets. You mentioned that we are in the secondary market. Yes, we are in the secondary market, but that's one aspect of our offering. We are in fact in the primary market where two banks can meet and originate a trade asset as well. So that's in fact one of the reasons why we are so keen to recruit banks. You mentioned Mitigram is into customer to bank. We are at this point bank to bank. So I guess that's what separates the two companies. Talking about the marketplace, if you were to relate it to the trade finance transaction life cycle, there are different stages that the life cycle passes through, obviously. And one of the key parts of that life cycle is that when a trade finance instrument is issued or any sort of payment commitment is issued of any sort, it should be acceptable and financeable at the other end of the transaction. And this is where coming onto a marketplace makes a huge difference. Today, we have marketplaces that are imperfect in many, many ways, and I won't go into the details because we don't have that much time. But what we are truly attempting to do is not just digitalize the process of how banks handle their correspondent banking operations, but actually how there's a digital transformation which makes a case for the customers at the end of the chain. So talking about what you just mentioned, the secondary market and relationship, actually, I tend to view it somewhat differently. At the primary level, there's a strong element of relationship, there's a strong element of KYC, and there's a strong element of knowing the underlying, etc. But when it comes to a secondary market transaction, the way we view it in TradeAssets, the underlying is abstracted from the actual proposition that is transacted on the secondary market in TradeAssets, and so it just becomes a pure bank-to-bank transaction. That's typically how we see it, and that's a good model for us because that allows fluidity in market operations. It reduces the trading friction, and it also makes it possible to arrive at accurate pricing. So from that perspective, for us, secondary markets is less to do with relationships and more to do with what the underlying bank risk is, which is being transacted.
And why isn't it working today? Why is this need? Why is there a need of you guys to digitize this? What are banks doing wrong? What are they missing out on?
It's to do with the configuration of the correspondent banking market. So what you have across the world are hub and spoke architectures. So you've got a bank in the middle, say a HSBC, for example, and they have their 10,000 correspondents, each on a bilateral basis surrounding them. Talk to a Standard Chartered, they'll have something similar. JP Morgan, same. So you've got a whole global market of networks which are centering around a hub bank. Now, what we have done is we've broken that model and we said that, okay, any bank on our platform can meet any other bank. You're not locked into a network. And that opens up possibilities because at the end of the day, what does matter to us a lot, and we keep talking about this within our company, is what can we do to bridge the trade finance gap? It's a matter that's been discussed quite extensively at other sessions in this conference and in fact earlier as well. And for us, that's an extremely important consideration. So we believe that we are adding tremendous value by reconfiguring the marketplace and making it easier for institutions to connect with each other. So in effect, benefit from the network effect, as Enno mentioned.
Srinath?
Johan, if I can just add a couple of things from the bank's perspective. I think Srinath makes a good comment. I think it is a market that's essentially needed. So if you think about what the banks are doing, right? So it depends on the prioritization. The first thing the banks do is they want to originate working with the corporates such as Vale and other large corporates, and they want to create that relationship factor. The second component is, when it comes to financing, sometimes you cannot, retain all the balance sheet. So what you have to do is utilize the means and the channels to distribute those assets. So today, what we typically do is we have a bilateral agreement with another financial institutions. Would you like to buy and sell depending on where you are? So you originate or you do a bilateral type of a structure. So, however, in order to optimize the cycle of this, meeting ultimately the needs of the corporates and etc., rather than having a 15 different bilateral dialogues, and having discussions, having so-called, whether you call it an exchange or you call it a different types of a fintech platform where the secondary distribution of these assets can be more visible to the clients with the right right amount of transactions with the risk and control in place. I think there is going to be a market for this, and this is going to allow us to create a more of a ecosystem where these activities can be completed more efficient.
Thank you for that, June.
Thanks both for that. Srinath, I do like your comment on the trade finance gap, because if digitalization is a hot topic, so is the trade finance gap. And I think there needs to be a shared effort in addressing it. We have received some questions. We're halfway through, so I will just throw this out to the floor. In every trade finance magazine, we could read about the first cross-border digital trade financing pilot over between Singapore and UAE. Do you see this now the start of something, or is this a one-off thing, more a marketing thing, or can we expect things to pick up? Any comments on this?
I guess I think I'm the only one that can comment on this, because my team is the one that are behind this.
Well, please, the floor is yours.
Okay, as you guys know, Singapore is one of the first few countries that actually enact the model law on electronic transferable record. And the Abu Dhabi global market is also another jurisdiction that has incorporated the model law on electronic transferable record into their legislation. The implication of the change in law means that paper documents that are negotiable in nature can be electronic. For those guys who are familiar with BL, digitizing this BL document, will know that the current commercial practice of digitalizing a BL is via a multi-party rulebook. And this is because most of the law that are enacted by many countries around the world does not recognize bill of lading in its electronic form. And this is a limitation of technology many years ago, where we all know that negotiable instruments need to maintain a singularity, because by the fact that you are possessing that piece of paper, you are deemed to have the rights of the obligations represented by that piece of paper. But we know that digital technology is not created to facilitate singularity, but the opposite. If I produce a document in PDF, I can copy as many copies as I want. But the availability of NFT technology, non-fungible token technology, coupled with blockchain, and the availability of this MLETR model law enable us to do many things that we cannot do before. And by implementing MLETR in the law, this allows electronic negotiable instrument to be implemented without multi-party rulebook or multilateral rulebook, that those like those that we are familiar with, used by many of the EBL platform solutions. And the trial between Singapore and Abu Dhabi global market, because both countries enacted MLETR, is a proof that we can actually start to transact electronic negotiable instrument cross-border in the interoperable manner via two different digital platforms without the use of multilateral rulebook. And this is what we are working towards.
Yeah, thank you.
And it's not one-off. It will lead to more things.
Yeah, it's quite exciting. I think it's quite exciting. I'm looking forward to see regulators sort of adopt to the NFT technology and what that promises. We also have a question asking, how far is the market from being channel agnostic? Will it ever happen, or will there always be silos and digital islands? I think we've touched upon this. Enno, you touched upon this. We realized that hopefully the market will solve this. I personally think that we're quite far away from it. There's quite a lot of money being put into different networks at the moment, blockchain initiatives and others. Swift is alive and kicking. Mitigram connected with Swift became a Swift application this year. So I do believe that the market will adopt to it. It will take some time, but there will be some underlying infrastructure connecting everything. Perhaps Swift, but could be anything, Swift APIs. If anyone objects, let me know, otherwise we move on.
I'd like to, if I could, you know, just imagine you're on a road trip and you have two young kids in the back seat, asking you that constant question, are we there yet? Are we there yet? And the answer could typically be, yeah, we'll get there soon. But in those circumstances, at least you recognize the destination. But the journey that we are on, I don't believe we can recognize the destination. So I don't think we'll ever have a satisfactory answer to that question, are we there yet? I was talking to a user of many of the fintech solutions, a gentleman who was a senior representative of one of the large banks in trade finance. And so I asked him, I said, you know, if we're looking at maximize the potential of trade digitalization, what is it that you're looking for? And I picked up on 3 points. One was that digitalization means different things to different people, because organizations have different priorities and different aims. So what exactly is the impact of that? That's one question. The second is the ability to manage the changes that are going to be wrought by digitalization. So does the organization have those capabilities? The third is, which has already been spoken about extensively, interoperability, common standards, smooth flow of data, etc. And finally, cybersecurity. The cybersecurity angle, which can be a bit tricky, depending on the organization's standards and the particular jurisdiction that the organization is located in. So in short, we don't have, I believe we have a long way to go, and it'll be a long time before we can say anything close to that we've you know, reached our potential. So I hope that's of some value, and I'd be happy to have any reactions to that from anybody else on the panel.
I think there are a couple of things. So, you know, the interoperability, and we're talking from the digital perspective, but if we think about the journey of trade finance, just as an example. So when we started lending loans to financial institutions and etc., everybody had different types of set of bilateral agreements, right? So everybody was doing in a different fashion. To Enno's and to everybody's comment, then ultimately market dictates as to what's the right types of things that we need to do. So this is when people recognize that everybody's creating trade loans, and is this really a trade loan? Is it something else, and etc. So fast forward a few years later, the organizations, the regulatory, such as, the organizations such as BAFT and ICC and et cetera comes out. And BAFT has done a wonderful job creating some degree of a uniformity, the BAFT version of so-called MDAAs and MLPAs. So these agreements can be used so that everybody has a common understanding of what is that we are buying and selling and what is that we are doing for the trade loan perspective. And I think if we take that same approach, and I think the digital journey is the same thing. So everybody starts in a certain bilateral ways, and people will recognize what's needed to create that interoperability. So Srinath, no, I don't disagree with you, but I am a little bit more optimistic that we got to move this a little faster, that rather than to say this is going to be a long journey. I think we have a role to play, and let's make that happen, right?
And maybe adding to that, your example of the road trip, while we don't have Spotify or Netflix to present to the back seat, I think we do have a common vision of where we are going. And that Vera basically told it. We all serve as IT vendors, either the banks or ultimately we do serve the corporates. And then you can argue ultimately we're serving the society. But let's take that apart. Let's focus on we're serving the businesses and the corporates that are using our services. Well, and they have priorities and they may change over time. So I think that element of that doing good, ESG, net positive, that wasn't there 5 years ago to that extent. So they will change. So ultimately the goal will gradually change, but it's there. And we can agree upon this. We may also agree that we'll never really reach it, but we can always focus to get there a little closer.
I like the optimism. Enno, you touched upon it. We're serving the corporates. Vera, you were modest enough to say that it's a team effort, but let's go back to the most important player here. This panel is a bit about what can we do more? What should be done more? And on the corporate side, my experience is that they're very hands-on people in trade finance. They are actually making sure goods are being shipped. It's very tangible what they do. So Vera, let's keep this tangible. If you want to give advice to some corporate trade finance manager listening to this, where do they start their digitization journey? What can you say about that? How do they approach it? Because there's tons of networks and there's no all-encompassing system. When I meet corporates, they say that I'm not sure what to do. Any help, Vera?
Very good question, Johan. And I'm very humble for you to pose this question to me because we have a lot of business people here. They're actually very tech savvy and they have great strategies as well in their own company. But I think to address your question, I think first it's important to have a clear set of objectives that we want to achieve through digitalization. Because digitalization is a means to achieving a strategic business goal. It is not something that you decide on a whim, nor is the goal for, just a simple transformation. It's really a corporate transformation. Once your strategy intents are clear, I think what you need to do is to identify and map areas in your company that can be digitalized, can improve your process, can deliver measurable business results. I think with that, you can decide then either you tailor-made a digital solution internally, or you find a partner, a company to work with. For us in Vale, we identify key processes which are manual and paper intensive. As these processes are low-hanging fruits, they can really benefit from digitalization. And from my experience in steering the trade finance digital transformation, our partnerships with fintech companies, financial institutions, and clients really made a difference. By leveraging the technology and expertise of various parties, we managed to achieve a favorable result through our integrated digitalization process. So beyond that, how do we ensure that digitalization process can be executed successfully? How do we sustain the results? Vale, at Vale here, we see digitalization as something that evolves. We also believe in continuous innovation to ensure that our digital offerings are relevant amidst the rapid change of the digital scene in the trade finance area. And I believe that our diverse and inclusive team is more innovative due to the heterogeneity of thoughts and backgrounds that the team possesses. I'm happy to say that the teams who are working on Transformation Vale are diverse, reflecting the diversity that we have in the world today. Coming from different backgrounds, members of these teams bring together different perspectives, and these different perspectives put together matter because the world is and has always been diverse. After all, who else can understand the complexity of our evolving business world better than a team that's diverse and dynamic? Thank you.
Vera, I completely agree with you. I missed this in my introduction, but the six of us here, we're representing 6 countries, 6 nationalities in 4 countries, 3 continents and 2 genders. So it's, I think it's a testament to what you're saying.
So we should be driving the change, not only
Yes,
the corporate,
yes. Oh.
everybody.
Yes, you're right. You're right. To that, when I try to sell Mitigram to corporates, it's much easier for me and for the corporates when they have a clear vision of what they're looking to achieve. It could be reduce risk, reduce cost, improve governance. It could be anything, but as long as they know this, it's much easier for them to pick and choose what to focus on. So I think the first thing you said there is very important for corporates to understand what they want to achieve. I would like to move to US again. And this is a bit, we don't have time to cover all of this, but June, do we really have to digitize everything? Goods are being shipped, people get their food, cars are being bought, and all of it's working quite well. No one can say that trade and trade finance is not working. I mean, it depends on highly skilled people and technology. It's not very digitalized, sure, but it's working. When we talk about end-to-end digitalization, is that really what we should aim for? Do we need this?
Yeah, so I think this is sort of what I was trying to imply at the beginning, Johan. So if you think about it, if we have an end-to-end digitization process, wonderful, right? So we should aim for that. So what that does is create efficiencies so we can do more. It builds scalability versus if we depend on what we do today within SMEs, essentially the industry becomes a headcount-driven, dependent types of business, right? So this is where we want to create a more of a ecosystem where, we don't want, forever, we're going to have a certain degree of an SMEs, but yet at the same time, it is critical to have a process in place where the certain technology, automation, digitization, whether it's the use of the API to AI, to OCR, to machine learning to execute some of these things in an efficient manner. So I think, yes, we've done that. This industry goes back, many, many hundreds of years, and we have settled those. But I think what we are looking to do is accomplish from the community perspective. When I say community, the banks, the corporates, the fintechs, regulatory agencies and trade organizations, the aim is to create a process in place where the digital journey takes place so that we can build scalability, create efficiencies, and avoid some of these bad news that we hear once in a while as to the essential frauds and et cetera. And this is where the technology and innovation create that supplemental help. And I think that's really the journey that we should be looking for.
Thanks. We have a question here, and you touched upon it, June. What role will advanced data handling capabilities and AI play in meeting sort of current objectives and what we want to achieve? On my side, on Mitigram, I was a bit skeptic, but we created this AI engine to read unstructured documents like guarantees. I was amazed how well it works. So personally, I think that it will play a bigger role than we expect the machine learning AI. Anyone else has anything to comment on this?
I think, Johan, what you mentioned about reading the documents, that's the very first step of what systems and machines can do today. I think where the power of data will excel is when we come to recommendations, right? So for a corporate, again, the focus is not on trade finance. The focus is on trade, i.e. ship the goods in the first place. Now, the question is, why would you engage in a rather cumbersome letter of credit if you can get around it? Now, can you get around it? That's the key question. And what's the risk, the business risk of not doing a letter of credit? Exactly. Now, what if data can be the counsel to the corporates to say, hey, in that trade corridor, 85% of the trade is covered by an LC, and an LC with these key elements in it. And you could spot changes. So saying that, hey, in this trade corridor, recently, the number of letter of credit has gone down or has gone up because the risk of a country has changed, deteriorated in a case. That is where I think data in the trade finance space can play a pivotal role.
I think to complement what Enno said, I would like to add, it's not only that, goes beyond much more than this. Because I think the pandemic has shown to all the business that cross-border transactions, can be impacted very easily with paper. And if you don't use the technology, it means then your cargoes could be stuck. Your vessel could have arrived there and your documents hasn't reached there. So I think it goes much more beyond that. And of course, AI is the beginning. It will help the industry, to reduce the discrepancies, not only for analyzing risk, but even to the day-to-day process. The very ground level trade finance, this can be applied as well. I think we are in a journey, and the technology, the blockchain, the use of even trade trust, all actually come into the ecosystem to facilitate, in a way, all the companies to communicate. Now we have to find the magic solution of ensuring the seamless connection of all these entities to make trade and cross-border transactions much smoother than now.
If I may, just add a point, Johan?
Of course, please.
Just sort of relative to what we've just been talking about, one of the aims of digitalization would, of course, be speed and security, which was sorely missing in our current system of trade finance. So this digitalization process is long overdue, in my opinion. And as evidence of that, just think back to last year when there were some unfortunate incidents in Singapore of oil trading companies falling apart and engaging in activities that were unacceptable. And if you were to analyze that, in one way you could say the weakness arose from the lack of good data. If banks didn't know whether the cargo was real, if the banks didn't know whether the documents were real, if the banks didn't know what exactly they were financing, it points to a lack of good data. So I think we need to tie everything up and use the power of technology to make it a speedier and safer marketplace.
Thank you, Srinath. I think we have a last question. It's not, I will turn it into a statement. We need to wrap up. We have a question saying that trade is still about people, about bilateral relationships, companies trading, banks financing, deals getting done. Does the panel agree it is important not to lose track of these fundamentals, even if the methods for conducting trade change through technology? Is a change of mindset needed in not seeing digitization as an objective, but as a key tool to achieve increased performance, trust, speed, along with reduced cost? I do think, speaking of behalf of this panel, it's a luxury I have as the moderator. We agree fully with this. We think that technology is not what we want to achieve, or technology, we want to achieve exactly what you described: performance, trust, speed, and reduce costs. So let's talk less about technology, maybe perhaps not even mention different technologies, and instead talk about corporate values for corporate banks, fintechs, and the society as such. So let's move more towards being a bit more pragmatic in all this. And with that, I would like to thank my fellow panelists for joining. It's been an excellent discussion. I think it's been a great ending to a great conference. And thank you for all the people who listened in. I'm sorry we couldn't answer all your questions. Thank you all very much.